Given the context of the CSD issue and the fair and lovely sachet price transition, I am satisfied with our performance. It has continued to be broad-based and the momentum has largely been sustained. Let me reiterate that as a business, we see personal products as a key focus area and a strong growth driver, which is integral to our strategy of winning today and winning tomorrow. Let me end by saying that I believe that our strategy is well on track and we stay strongly committed towards delivering growth which is consistent, competitive, profitable and responsible. That's all that I have to say. Over to you, Dinesh.
Thanks, Mr. Nilfeeder. With this, we'll now move on to the question and answer session. May I remind you that this call is only for institutional investors and analysts, and therefore if anyone else on the call has a question, you might like to get in touch with us at the investor relations team at HUL. What I'd now like to do is to hand over the call back to Saurabh. Saurabh, handing over the call back to you to manage the next section on question and answers. Over to you.
Thank you so much, sir. Thank you all the panelists. With this, we are going to start with the Q&A interactive session. So I would request all the participants and the attendees who have joined in the audio, if you wish to ask any question, please press 0 and 1 on your telephone keypad and wait for your name to be announced. I repeat, participants who have joined in audio can press 0 and 1 to ask a question. I would also request the participants, if you wish to ask any question over the chat, you can use the chat facility over the web. So there are a couple of questions that we have on audio. The first question comes from Mr. Sanjay Singh. The line has been unmuted, Mr. Singh.
Hello.
Hi, Sanjay, go ahead.
Yeah, sir, just wanted to understand, this is on PP margins, that PP margins on a YOY basis is down about 125 bips. Now, if I'm not wrong, number one is CSD sales being lower, that CSD margins would have been typically lower than the normal company margins at the segmental level. Hence, there should have been some kind of improvement in margins per se. Also, if I'm not wrong, your Star Plus, this thing was off with Star in this quarter, and hence there would have been some kind of lower A&P spends. So why is this margin decline? If you can explain it.
Yeah. So I think first thing, Sanjay, thanks for the question. Clearly you are on a reconciliation mode with variety of drivers, inputs, Star PV, etc., etc. Let me just say one thing, which is we have, periodically, regularly, consistently maintained that looking at things from the narrow lens of a quarter is sometimes unhelpful. It is true irrespective of which way the numbers move. As far as we are concerned, PP is clearly a more profitable segment as the margins reflect, and the in-quarter numbers can be for a variety of reasons, whether it is linked to innovation, it is linked to mix or other things. The second point I want to make is the assumption that you have that canteen stores department as a segment has a poorer margin is not necessarily correct. So all I would say is that do not get too much into a single quarter, and the assumption of canteen stores margins is not necessarily correct.
Okay. But just as a sense, even if we look at the first half, your overall PP margins are lower by 70 bips YOY. So should there something to be read, or it is only maybe a quarter-on-quarter thing overall? There is no reason.
I think there is nothing to be read. If I interpret your question, is there any cause for concern? Let me assure you there is no cause for concern at all. It is a profitable segment. It's a segment in which, frankly, the percentage margin from our perspective is relatively of lesser importance than investing to drive the category growth, both for today as well as for tomorrow. Some of the investments that we drive the segments and build the segments for tomorrow will, in the current year, potentially even in the next year, not have a commensurate impact on top line, but in the fullness of time, it would be strategically taking us into a much stronger position and being better prepared to win tomorrow.
And in terms of soaps and detergents margin, I recall last quarter, where we had made a good improvement sequentially. You had mentioned that there is some kind of inventory benefits which was sitting in the soaps and detergents segment, and hence probably extrapolating those numbers wouldn't be prudent. But of course, we have now seen a better expansion this quarter, and this is despite a very significant increase in media spends or industry media spends, on S&D. So, is there? Just throw some light on this expansion despite inventory benefits last quarter. So, what is going on in how do we?
Sanjay, my response is exactly the same as what I mentioned just a little while ago for personal products. If you just replace the word personal products with soaps and detergents, the principle still remains the same. I'd urge once again that please do not look at a quarter either way, up or down. It's just, first of all, that's not the way we run our business. We run our business for the long term. We want to make sure that we continue doing the right things that will strengthen the leadership of our core, which is sort of winning today, and investing in businesses, segments, markets, etc. of tomorrow, which means, we will be well positioned to continue winning in the future. So just a request, please don't get too focused on a single quarter line number.
Okay, that's it. Thank you.
Thank you, Sanjay.
Thank you, Mr. Singh. Well, the next question is from Mr. Avnish Roy from Edelweiss. Mr. Roy, you can go ahead and ask your question, please.
Sir, thanks for the opportunity and congrats for the good set of numbers. My first question is, in the past quarters, we have seen slowdown in packaged foods. Now we are seeing some discretionary slowdown even in PP. In the previous slowdown in 2008, was there a slowdown in PP? And if you can tell us, how do you read this situation? Can this extend to some of the other categories also?
So, Avnish, thank you first of all for asking the question, because the way you asked the question, it might suggest that maybe the way I talked about the volume growth moderation may have got misconstrued. So firstly, I'd like to clarify, we are not talking about a slowdown to mean that the markets are declining or the volume growth of the market is declining. When I talked about the volume growth moderation, what I meant to say was in certain discretionary categories, in some segments within PP, in some parts of packaged foods, we are seeing the market growth rates being a little bit slower than what we saw in the previous quarters. So these markets are continuing to grow, both volume and value, but it is just that the growth rates are slightly lower than earlier. So if for any reason my previous comments suggested that the markets are actually degrowing, then let me clarify that. Having said that, your question about 2008, 2009, I think more about 2009. I think that, we did see some amount of slowing down in growth even at that time. But in addition, in 2009, we saw a significant amount of downtrading in laundry and tea. That is a phenomenon that we've really not seen this time around.
And any insights why the consumer behavior can be so different in different slowdown time horizons?
Well, if I were to just give you a personal viewpoint, first of all, I think we must expect to see change. I think the times that we live in being so dynamic, between 2009 and 2012, when you have a sort of time gap of 3 years, I think a little bit of change you should expect to see. Beyond that, I think we should have to look at the overall macroeconomic condition, what is happening to employment, etc. There are many other factors. It is not therefore something that you can see a very close. You can't see a very, direct correlation because the circumstances are not the same. If you look at what's happening on commodities this time, for example, whereas in 2008 you saw significant inflation in commodities, this time in 2012 you are seeing commodities flattening/softening. So palm, as I shared in the first few charts, PFAD in September quarter has softened. So it is not identical situations that we find ourselves in.
So my second question is on the hair care. We already had many brands, and after so much time, present launch has happened. Is it largely urban-centric? And if you could tell us from a consumer buying behavior, how are you really able to create that segmentation? Because the price points are not really drastically different from maybe some of the current offerings. So can there be a shift from your existing brand to present, and how do you really manage? Because in skin cream also you see the same kind of you do it quite well, but wanted to understand how do you manage and how large is this opportunity?
So firstly, I think we are quite excited with the launch of TRESemmé. It's a proven mix, not just in the United States, but in the two other markets where we've taken it to, which is Brazil and the United Kingdom. It's done very well. It has a very distinctive proposition. One of the important things as you have a portfolio is a very distinctive proposition, which therefore results in complementarity in terms of what you're doing. The proposition from a consumer standpoint, which offers the consumer a salon-like treatment, which you can get at home, a salon-like hair feel which you get at home, is a very, very relevant proposition. Most consumers would agree that they get a great experience when they go to the salon. Unfortunately, they can't keep going there regularly. They can't go there every day. It's expensive, but they all agree that that outcome, that experience is special. TRESemmé builds on that. And therefore, we believe that as a proposition, it is unique and in a space which has not been occupied in the country thus far. Therefore, we feel it is relevant and will add incremental value to our business. For sure, there would be some aspects or some part of the TRESemmé business and this, which we get, will come from our portfolio, given the fact that we are such a large player. Our job is to make sure that in the way we go to market, in the channels that we drive, in the manner in which we activate, we get more than a fair share coming from other competitive brands rather than our own, but that time will tell. And lastly, when you have something like TRESemmé coming in with a fundamentally new proposition, it has the possibility of growing the market per se, as a result of which, frankly, a little bit of cannibalization here or there is not as important as the capacity to grow the market, satisfy consumer needs better than we were doing before, and overall provide us an incremental value.
So that's very useful. One last question. On the tea segment, we have seen recovery in the Taaza brand. But if you could talk about the low end of the tea consumption, what are we doing there? Because there is a lot of competition there and inflation is happening. So any viable option we have at the lower end, or our focus will be at the mid and the premium end?
So I think at this moment our portfolio, which is with Taaza, Red Label and Taj Mahal, which we've got, allows us, and with 3 roses in the southern part of the country, allows us to straddle the pyramid. We believe that this portfolio and the manner in which we will play it with price points across different geographies will address us to drive upgradation in the tea market and participate effectively. Lastly, I think while we talk about tea with these 3 brands, we continue to believe that even within tea there is a role for upgrading people, and we will drive tea bags, which are a very small part of the portfolio, but will be segments of the future hard over the next few years.
So how are tea bags growing versus the other market players? Any sense on that?
Tea bags are growing many times faster than the overall category.